Gold prices rose to an unprecedented high on Wednesday, which is as a result of geopolitical tensions in the Middle East and concerns around the upcoming US elections, which has now stoked the demand for safe haven assets. These uncertainties have driven investors to seek refuge in gold, which historically has been seen as a reliable hedge during periods of economic and market instability. Right, welcome to Daytopia Wealth and Research, where we transform your everyday news into financial opportunities. Kindly subscribe and follow our page to stay updated. My name is Dr. Yusuf. I'm a financial expert, qualified financial advisor, and a chartered accountant for over a decade. Disclaimer: this is not a financial advice. First of all, make your own research and then consult a financial advisor. So let's get right into it. Gold has always been regarded as the ultimate safe haven asset. So a safe haven asset is an asset that is expected to retain or even increase its value in terms of market turmoil. In turbulent times, investors usually put their investment in gold as a means to protect their wealth, which typically results in increased demand for gold and hence the rise in prices for gold. This year, gold has delivered outstanding returns fueled by the combination of factors like the persistent geopolitical instability, expectations of interest rate cuts, resilient US dollar during the central bank gold purchases. Now, according to analysts, both gold and the US dollar are currently benefiting from safe haven buying flows driven by the looming US elections and the ongoing geopolitical tensions. On Wednesday, spot gold reached an all-time high of $2,749 per ounce before slightly retreating to 0.3% to $2,738, which was due to some profit-taking activity. Meanwhile, US gold futures dipped 0.2% to $2,753.40 per ounce. This surge highlights gold's lasting popularity during uncertain times like this, as investors see it as a key way to protect their money from unpredictable global events. Now, let's go into the financial opportunities. So the first financial opportunity here is that investors can purchase physical gold in form of coins or bars, which can serve as a long-term store of value, especially during periods of economic instability. For those who prefer a more liquid investment, gold ETFs provide exposure to gold prices without the need to hold the physical metal. ETF means exchange traded fund, which is a fund that pools investments together and can be bought and sold like an individual stock. ETFs, however, they track anything like the prices of a commodity. So gold ETF will mean that an ETF that tracks the price of gold, right? So active traders can take advantage of short-term price movement through future contracts and gold ETFs, potentially profiting from both price increase and declines. The second one is mining stocks. So gold mining companies often see their stock prices rise along with the price of gold. So investing in these stocks can offer leverage exposure to gold, as their profitability tends to increase when gold prices surge. And the third one is currency hedging. As gold is often traded in the US dollar, international investors can benefit from a weaker dollar by holding gold. It serves as a hedge against currency depreciation, which is an appealing factor during times of geopolitical or economic stress. So, there you have it. As global uncertainties persist, gold continues to shine as a reliable safe haven asset. With record highs in its price, investors are likely to remain drawn to its stability in the face of economic and geopolitical challenges. All eyes will now be on how gold performs in the coming weeks, especially with the key events like the US elections on the horizon. And thanks for tuning in again this week, and remember to stay informed and seize every opportunity that comes your way. Till next week, thank you and take care.